So we got the weekly close for Bitcoin and the verdict is out. The bears still remain fully in control. What's going to happen next? That's what we'll discuss in today's show. And if the bears continue to maintain control, at least in today's video, I'll show you an exact plan that you can follow if you are looking to get out of positions, specifically spot positions. I'd assume if you've been stuck in leverage, you probably already liquidated on that front. So let's get into it. Where's price going next? Smash the like button. Let's get into the show content. If we look over here at Banter Bubbles, again, a sea of red. There are one or two coins that are pumping. ASTER, one of them. We did drop that in Whale Room as well in the Discord. So for those of you that are playing that, potential of a big cup forming, right? We don't know if we'll get the cup and the handle, but potentially forming a cup rounding out over there. So one of the better looking charts that is trying to turn a corner over here and moving into a low time frame uptrend. So there are trades, they're on the table. We're also taking short trades across the market, most specifically within the traditional markets, right? I'm currently short on gold and silver. This is the trade setup. At this point, you can already start to eliminate some of your risk. You're in the money, you're in the profits over here. We'll continue to monitor this, but I would expect support to be found coming into the 200-day moving average. And we're expecting a major top on gold for the year. Just some point within the next 6 weeks that should take place, and it seems very probable. We're also short over here on silver, so I'm going to continue to hold these short trades. If you have been watching for the past few weeks and months, remember we did speak about this, and we said that this is a very high risk trade, but it's worth taking because the silver and gold chart has gone somewhat parabolic. So when you get a flush over there, it's going to be a big move towards the downside, providing you similar swings to what crypto does, right? If you look at that risk to reward, that's a 37% move. If we look at gold over here, well, that is an 18% move. And we also already nailed it on MicroStrategy, which is already down 36% since our entry. And I guess not instilling much hope within the market when Michael Saylor over the course of the weekend posted the Titanic burning, sinking, while he was on a lifeboat sailing away, right? So I guess a little bit of worry within the MicroStrategy sector over there. It's coming towards the downside. And they say this is why it's nuking, right? For the first time ever, MicroStrategy has gone below its net asset value. The NAV has dropped below 1, which means that Saylor's BTC holdings are worth less than their total debt that they have. Traders are front running what some are calling a death spiral for MicroStrategy. And there's a lot of fear within the market. As long as this net asset value is below 1, the market is going to be somewhat fearful. And I'll just leave that over there. You make your own determinations. Is that going to be next? I don't know. All I care about is that we in this trade, and we did warn of this a long time ago. Those of you that have been around the block, you know it. I'm not going to go back into detail, but it has been the Adam and Eve chart pattern, right? The Adam and Eve chart pattern, which is now broken below the neckline, which means we're still looking at much further downside. This happened back in 2021, and it created that divergence where Bitcoin was trading at 65K on the first peak in 2021, second peak at 69K. This time around, Bitcoin hit 107K and then 126K while MicroStrategy put in lower highs, right? So that is the one thing that we have been looking at, right? That's one thing over there as this begins to distribute. Let's quickly see. There's also a little bit of shakiness within the stock market as Robinhood also broke some key levels. So you had your higher high and high low structure over here forming, and you can see officially breaking that down, creating a lower low for the first time, and consequently, you're going to have to look down towards some of these key levels for support. So moving on to crypto. Crypto on the monthly chart is still at theoretical demand. So a little bit of hopium over here coming into support, potential bounces, but you're coming off of the tweezer tops, very similar as well to what happened in 2021. We also met the measured move of that cup and handle formation. Here it was. Here's your cup. Here's your handle. Price runs up, hit the peak over there, and that's that, right? So potential bounces from these key areas. We want to line this up with the dailies to see where those demand zones come into play. But right now, the monthly is tagging exactly into the golden pocket, which is your 0.618 and 65 fib. There it is, getting a small reaction, but is it enough? Well, you're going to have to look on the daily time frame to see if that is going to be enough. But understand this, when things fall out, they can fall out very, very, very quickly. Look and compare these current candles to this environment over here. If you do get a bit of a bounce, it's probably going to look something similar to that. That's going to be your complacency bounce, but don't expect that that complacency bounce is going to do this, right? Like every cycle, people think that, well, the complacency bounce will take Bitcoin back to 120K. That will be lucky if you do that. If you run all the way up to like 120K, that will be a great opportunity to de-risk if you didn't already de-risk over there. So that is demand over there. Here's your weekly time frame. A lot of failures across the board. Your weekly RSI is now closed all the way down there. And this is the one thing that we said will give the bulls very, very, very slight benefit of the doubt if they're able to bounce price out of these zones, just like they did back in August 2023. They were able to do it again in August 2024. Pretty interesting how those timeframes line up. And then we had April 2025. And then we came in over here, November, which everybody said, the fourth quarter is the most bullish. And in all fairness, it was in the fourth quarter on the 1st of October, I believe, or early October, that we put in that all-time high at 126K. And then it's just been down only, right? So breaking some super critical key levels over here on the weekly time frame with that RSI. And then we also spoke about it that last week we said the bulls would really need to rally price aggressively on the weekly to close above 121,500 to avoid the 3-week MACD bearish cross, which you've now got. That is confirmed. So they weren't able to do that. And you also have the monthly, which is now officially crossed towards the downside. And we have a couple of days left to go, or just under 2 weeks left to go to confirm that. And if we do confirm that, again, I just want to remind you that any other time that we did have that bearish cross, especially coming from this kind of a height, you led into a bear market, right? That was your bear market. So I definitely think it's high time to be cautious if you're not already. We have on this channel been cautious for quite some time. And your final nail in the coffin would be if you supersede or extend your corrective phase beyond what this correction looks like. That is the nail in the coffin. Then you know that you're in a bear market, and any bounce off of that should be sold. And I want to talk about that today, right? We'll get into, the whole Wall Street cheat sheet complacency bounce, where it is that you would get the primary exit opportunity. But to extend past this, well, if Bitcoin drops, even a smidge below that, which would take it to $85,000, you would have dropped 32% from the high, which would extend beyond what the prior correction was so late in the cycle. And that's not something that you want to see, right? That's a bearish sign over there. And that would signify that any bounce, therefore, that occurs off of here is extremely likely to lead into a lower high. What would use is some fib tools over there to mark out the 50% level, anchoring from wherever the top, well, we have the top anchoring from the top to wherever the local lows formed. And then you're going to look for the bounce into that 50% level. And therefore, that becomes your complacency, where you're going to be looking to exit any spot positions that you may already be stuck in. Now, many of you may be wondering, well, should you be buying the dip over here to play that complacency bounce? That's something that you can consider, but it's incredibly dangerous. That's all you need to know, because this is currently a falling knife. You guys know the saying, don't try catch a falling knife, because you are going to cut your hands. But if you were to try catch the falling knife, I would recommend that you do it in a pyramid fashion or triangle fashion, where you are scaling in with smaller buys at the top and larger buys as you get closer towards the bottom. I think that 88K is going to be the absolute sweet spot, which comes into this candle over here for a bounce zone. Because not only do you have the confirmed breaks now on the weekly time frame below the 50 EMA. Remember, my early warning sign is always the 21 exponential, which is now angled towards the downside, and price is firmly below that and has been for quite some time with the break of the stop and reversal indicator. And we said that signals trouble. So a lot of the late laggards that are in the market will be focused extensively at that 50 EMA, which is currently situated at the psychological $100,000 mark, and price is now closed below that, which means for many in the space, that is the exit signal, which means that you might see a bit more of a shaky market this week, and you want to be incredibly cautious before getting long. So if you are trying to catch a falling knife, scale in slowly, bigger buys closer to the bottom, smaller buys at the top. So you're doing that as opposed to making massive buys over here. And if price goes against you, suddenly you are down, which is pretty much the situation that MicroStrategy find themselves in. If you go and look at their buys, there will be a buy that will be announced today, by the way. Michael Saylor tweeted over the course of the weekend, and there will be a buy that comes out today. But the problem is that the buys become smaller and smaller at the as the market starts to roll over, and it's not going to really amount to much within the market. So do be careful of that. Okay, moving on. We also have seen the confirmed breakout over here of the USDT dominance. You've broken that downsloping trend line. Remember, every single major cycle top or local top occurred when USDT dominance bounced off of this yellow line that's rising towards the upside, and that came off the yearly open. So far it's looking like the same thing, but what's more important and more significant to me is going to be this resistance zone, and I'll highlight and box that area out for you. So that whole resistance zone over here, I'll make it a little bit tighter. Let's call it over there around 6.1%. You can see previously major support, right? Support bounces, support bounces, support bounces. Resistance comes down, resistance comes down, resistance comes down. Each of those rejections lead to quite a sizable bounce within price. So each rejection leads to a big bounce. So if bulls do want to run it, well, they should go for it now because time is running out. And I have a point that I want to make around that, but I think it's interesting when you line that up with the fear and greed index. A lot of the times prices drop below, anywhere from that 0 to 20 or 1 to 20, I should say, not 0, but 1 to 20. It's very rare that we see under 10 on the fear and greed index, but those are some of the prior times you put in some sizable bounces. But what is important to denote and understand from this is, yes, fear going to the 10 to 20 region can elicit pretty big bounces, but you can still continue within your downtrend, right? So what happens if you're in this environment? You can see the fear and greed was 10 to 20, 10 to 20, and then suddenly it fell through and price dropped aggressively towards the downside. So one could make the argument that maybe things are quite extended over here and there should be a bounce. If so, I still believe the sweet spot is going to be at that 88K region, and I'll show you why. But what's more important to focus on is the USDT dominance chart on the weekly, because this is multiple tests, and you guys know it. We've spoken about this a lot, right? That's test number one. This is, let's even give them the benefit of the doubt, and we'll combine the 5th of August and the 2nd of September into one count and call that 2. And then we have over here 3. Which means if you come into this area over here, that is your 4th attempt. And you guys know it, 4 tests into a level drastically increase the chances that it's a real and serious breakout or breakdown if it's coming into, a support level. So I wouldn't fade that. You want to utilize the low time frame like the daily or the 4-hourly to monitor this. But at the end of the day, if you're a trend trader, you've broken trend. You broke that downtrend. You're back above. I would say realistically, okay, this is realistically what I think would happen. Realistically, I would say that given the combination of the extreme fear over here on the 10 to 20 read, which does technically lead to a bounce soon enough, theoretically, even if you do have that, what's most likely to happen is this would just pull back as price bounces to back test this as key support to gear up for the next move up, which means that pullback on the USDT dominance would lead to that complacency bounce. So be aware of that, right? Here's your 88K level coming in as very, very, very key support. And therefore, if that level gets tagged, I would like to see price break back towards the upside, at least for a short-term bounce. And that's where you're going to be looking for that complacency bounce as you come into all of these EMAs, which are going to act as a lot of resistance over there, which might only allow price to just get back up into, around that $105,000, $110,000 region. And then you want to be careful that that is not a complacency bounce. And if it is, you want to exit over there, right? So you let me know, where do you think we're at within the cycle? Go and vote as well on the poll. We do have a poll. Are we going to see the complacency bounce, or, are we just going to go down only? Because I think that a lot of people probably feel more within this region. I can at least see from the sentiment, if we do continue towards the downside, I think it's denial, right? How many of you have heard this? My investments are with great companies. They're going to come back. I mean, multi-cycle projects, right? So nothing to stress about. Multi-cycle projects, that's commonly the things that we hear. So go and vote over there. What happens next? Bounce now, lower high later, which would be your complacency bounce. Bounce now and run to all-time highs. 20% of you still believe that's possible. By the way, I don't want to write it off and say that's impossible, but if it is going to happen, they're really leaving us on our last breath. We're holding on, final breath. They would need to absolutely pump this thing to the moon ASAP. It has to happen basically this week. And I'll build a case for, why you might see a bounce, but why it's unlikely that you're going to see those all-time highs. We'll get to that in a moment. Do you think drop below 90 and then bounce? Well, if that happens, this would be the $88,000 region. I think I'm leaning more towards that. And then 14% of you are just cruel, just nuke, no bounces at all. So let's quickly go through to the Whale Trades website as well. All of that is linked below, by the way. Let's quickly see what's going on over here, and we'll pull that up. We'll go into the Whale Trades website, and we'll quickly check out some of the data. Remember, you have a confirmed expansion over here. It's still taking place. We said this was the next level, and that is that $88,000 region. And before we get into that, actually, let's just mention this, right? It's downtrend, right? Low lows and lower highs. There's a lot of levels that need to be reclaimed. You have a high volume points of control over the last 1 year. And that's the question. Is this all just massive distribution or not? Well, you need to see Bitcoin at least starting to attempt to reclaim some of these high volume profile areas. If you do come down towards that 88K region, and then you see price bouncing and rejecting and not able to get above 100K, this is your last 1 year's points of control coming in on the green line, which is $95,000. So this 95K level where we find ourselves right now is vitally, vitally important. This is where the most amount of Bitcoin has traded hands. Okay, so keep an eye out on that. And we still have low volume. So remember to study the volume. When you do bounce off of here, if that volume is still dropping, that's going to be a bearish signal, right? That becomes another opportunity to exit. And there are some interesting data points that are going to be coming out, which is going to be the non-farm employment change, unemployment rate. All of that's coming out when? On Thursday. What else do you have on Thursday? Well, you have the bear moon printing on Thursday. You guys have seen how the bear moon has reacted and what it's done to price. You also have the confirmed death cross between the 50 and 200 EMA. And that is going to be governing price towards the downside. And therefore, I think bulls are going to have an incredibly tough time getting back above that previous lower high, which is 107,700. In order to get bullish, you need to see an aggressive move up, and you basically need to flip all of this into support like that. I don't think that's going to happen. I have to be honest with you. The most likely outcome is you're going to run up over here and you're going to reject with another low high, and then you're going to continue down. Unfortunately, that's the truth, right? But there is a lot of trades to still be taken, right? There is a lot of trades to be taken. So let's have a look over here just to do a quick refresher, get all of our data over here on the Whale Trade site, and see exactly what's going on. So in terms of the skew, it's relatively neutral. We don't have aggressive shorting down here, and the funding rates are trading at a slight premium, which actually means that the more objective data, which shows you what the funding is, what are people actually doing with their money? Are they long or they're short? Well, that's more objective, and that's telling you a different story to what the Fear and Greed says, which says we are 10 to 20. I mean, if I had to give you the funding rate on a sliding scale like the Fear and Greed, where that would really place us is probably in the 50 to 60 region, which shows you that there's a lot of people that are still looking for longs over here, and therefore the long to short ratio is not extremely negatively skewed, which means bears may remain in control and can continue to mark price down. So discrepancy between the objective data, that being the funding rates, and then the subjective, which is going to be the traditional Fear and Greed index, which is actually showing capitulation, right? 14 over there. So liquidations also relatively tamed. Over $1 billion is something significant. Daily exchange volume still coming towards the downside. You'll have to refresh this in about an hour or two's time when the new data comes in. But then one good thing that we did see is multiple weeks of negative ETF outflows. And we wanted to see that. We spoke about that for months and months and months. The problem was, we said, in order to get that, the chances are that Bitcoin will probably drop below $100,000. That happened, right? It happened. They dropped below $100,000, and that's what puts you in now a very catch-22 situation, which means you have to shift your mindset from, instead of the ETF outflows going multiple weeks negative, which creates a buy the dip opportunity while the market goes into extreme fear, and we see a big shift in the skew over here, which we got all of that, right? The problem was we needed to see all of that happen while holding $100,000. Because then that would be a buy the dip opportunity that could likely lead to new all-time highs, possibly lead to new all-time highs. But the fact that we're seeing all of this now is too little, too late. And it doesn't mean that it's not a buy the dip opportunity. It means that you can still look for that trade at about 88K, but that bounce is most likely going to lead into that lower high, and therefore that is your complacency bounce where you would be looking to offload some of your position, right? So right now that looks like the most likely outcome, just to be absolutely crystal clear over there. I see Logan from Canada has just joined. Oh no, they didn't join. They just locked in some profits. I do want to let you know, guys, for people that are joining into 𝗪𝗏, there is a promo code Black Friday 2025. It's linked in the description below over here. So if you go through to the description, you're getting your biggest savings of the year. You'll never get another saving like this. I can absolutely promise you that. For any of you that want to use the early Black Friday special, it's here. Click that link. When you click that link, you'll get 47.13% off, but only if you use that promo code, right? So it will take you through to this page over here. Let's just quickly go to it. It'll take you through to this page over here. Remember, it's usually $2,268. Just apply the promo code Black Friday, right? So you'll get through to a page like this, put the promo code in like that. There it is. Apply it. Just click join, and you'll see it will discount it. It works out to just under $100 a month, right? Which is absolutely amazing. You'll never get this again. I can absolutely promise you guys. So use that link over there if you were thinking of joining, if you wanted to join. We have an active group of traders. You can see over here in 𝗪𝗏 as well. I did drop that. I believe price will come down into the yearly open. And that's exactly what we got, right? There it is. Price came into yearly open. Now what we're looking for is a little bit of a relief into this 98,000 region, which is going to be just another rejection. That's a level that you want to reclaim. All of this is in 𝗪𝗏 for those of you that do want to join. Okay, cool. So we've got that out the way. We've covered the whale site over here. Everything is listed. Anything else noteworthy that we have to go through? Let's just quickly check the flows. We must see the flows very quickly. Remember, this site is free for you guys, right? Flows, Zcash. Zcash still doing very, very, very well. I do still hold a small part of my position. But I still stand by what I say. I do believe Zcash will probably top before the end of December. Okay, so it can still go a little bit higher, but it's only got a few more weeks left. And then I think Zcash is over. Okay, cool. Let's move on. So why have I got this level? The liquidity over here is currently stacked, as you can see, 75 million and 70 million. And it's all situated between about $97,000 and $98,300. So I think price can move up into here. I think that you're better off waiting for the week's price action to develop, let the ranges form, and then stick to the low time frame trading and trade those trading ranges. And that's what we've been doing in 𝗪𝗏, right? You can see over here, Josh Up, one of our coaches, 1,000%, huge trade over there on Myro. So we're longing, we're shorting, all the gold trades, silver trades, everything is dropped over there in 𝗪𝗏. So make sure that you use that. Let's go on to the USDT dominance. Measured move has been met. Price has moved up into that level, right? That was our area of interest. Price moved up into the 5.86% region, and you are starting to pull back. But I do want to remind you, this is nothing but a series of high highs and high lows, and you want to line this chart up with the USDT dominance on the weekly. So let's actually move those next to each other. So you want these two charts next to each other. USDT dominance on weekly, remember what I said? Any pullback that occurs over here would probably lead to the complacency bounce on crypto. If that creates a bump and run, meaning it just finds support over here, this is going to be massive support at about this 5.2% region, then that's your opportunity to exit before the next bounce up. Okay. And I'll answer questions as well for you guys in the chat over there. So let's line some of these things up. I want to look at the most local part of this move, the local low up to the local high. And where's that? The 50% level is going to be very significant, which meets up with that 50 EMA, the red line. So you might get a short-term pullback into this region, and just check that could very well lead into a high-low. And that basically becomes your opportunity to enter short trades and exit some of your positions that you're stuck in. Next level of interest would be if it gets really deep over here, you're dropping down back into the trend line. And I just want to price label this and actually see, how does this line up? So we got 5.28%. We got over here 5.5%. So 5.28%. There you go. What's interesting about that? More or less within this region. So the ascending triangle retesting into that trend line, which is forming high highs and high lows, coincides with this pullback as I've drawn out over here into that bump and run scenario. Okay, I think interesting food for thought over there. Keep an eye out on that. Very, 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 very important. So a little bit of a pullback over here is currently in motion, but essentially we are long on Tether right now. We're long on Tether, and this is the chart to see if your thesis remains correct. Alrighty, what else? Let's get into altcoins. So there's Zcash, massive pump, complete outperformance. But remember, I said it's very unlikely that you'll see something like this continue for more than 9 weeks. So I'm anchoring from the start of the aggressive move was on the 6th of October. Currently, we're 7 weeks in. 9 weeks takes you to the first week of December. So Dan says, no altcoin season this cycle. Well, the thing is, we have had an altcoin season. It's just been in select coins, right? I mean, this is an alt season right here. But it happened very quickly. If you look from low to high, like that's over 2,000% in a few weeks. We saw the meme coins run in March and November of 2024. We saw a little bit of an AI run as well towards the end of 2024. So there has been some moves, right? There's been some alt seasons here and there. Solana went from $8 all the way up to $296. So let's actually have a look at that. If you measure from the low to the high, 3,000%. So similar to what I just showed you on Zcash, right? 2,000%. It just happened very quickly. All right. So some say alt season is definitely coming. There is a possibility. In order to know that, you need to look out for the Bitcoin dominance chart, which I must say does look quite heavy. So this does look rejective. But the problem, this is where a lot of people make big mistakes, right? The problem with this is even if you saw this happening, right? Even if you saw this rejection take place over here and this just absolutely melts down back to the bottom over here, that would bring a lot of money into certain alts, but not all alts. And that's where the big mistake comes into play, right? Is you'll be shocked if you're holding a index fund of all the different altcoins. You'll be shocked to see that you probably, your total position size probably won't go up that much because only a few of the altcoins will actually run. And that's where you need to be incredibly careful. So I would say if you are going to try and play this Bitcoin dominance drop towards the downside, and again, I'm not claiming this will even happen, by the way, but if it does begin to reject aggressively and start to move down strongly towards the downside, what you want to pay attention to is things like Ethereum. And the reason why is because Ethereum is still one of the blue chips. The ETH-BTC chart is still theoretically fighting for its life to bounce out of the 0.382 and 0.5 level. It's holding the yellow trend line. So don't get greedy is what I'm saying. Just take it. If it's an ETH trade, an ETH bounces 50% against Bitcoin, rather take the profits than get too greedy and try and buy a lottery ticket. Okay, cool. So we can go through a couple of the other altcoins over here, but the main things I want to say for today, focus on USDT dominance, vitally important. It's currently putting back, and I do think it'll come a little bit further, anywhere between, and I'll box it out over here for you guys. There you go, into that zone. I think it's going to come into this zone, into this yellow box. That probably creates a little bit of a bigger bounce, probably into this liquidity zone over here. And then I think USDT dominance is going to bounce over there, and Bitcoin will probably just reject over here. And that's just going to be a bearish retest. So there we go, bearish retest. This whole area is going to be a big zone for Bitcoin to get above that psychological $100,000 mark. If you can pump and get back above these zones, wonderful, no problem. Then we will reevaluate. We don't need to rush into any positions. It's about capital preservation. It's about keeping your portfolio tight in the sense of not holding too many coins. Concentrated, tight, fewer coins, fewer things that you're playing within, and that's it. Okay, what else do we have for today? Big mention as well for Bitfunded. You'll never get a better opportunity than today on the Bitfunded challenge. It's also linked below. They did start an early Black Friday promo. I had to go back and forth with them for weeks and weeks and weeks for this deal. So I don't think you'll see it anywhere else. But it opens up in 5 minutes time, right? 5 minutes time, they're opening the gate. Buy now and you get 50% off. They're saying that if you buy 3, you get 3 for free. And this is the big kicker, guys, 100% profit split, which means if you buy a challenge, if you do get a challenge over here on Bitfunded, and let's say, for example, you buy the $10,000 challenge and you trade the account up to $20,000, you get all $10,000, all $10,000. And I double checked and triple checked with the CEO and founder. And I asked them, but what happens if you want to buy, because it's such a good deal, right? What happens if you say, hey, you know what? I want to buy 30 challenges instead of 3. You want to buy 30 challenges and you get 30 of them for free, which means you have 60 challenges, which is enough to last you for the next year. Do they expire? And he said, no, you can use it anytime you want. So you can use it 8 months from now, 9 months from now. And I said, but does it maintain 100% profit split because you bought it under the Black Friday promo, even if you're only using that 10 months from now? And he said, yes, you still get 100% profit, which means if you're a Bitfunded trader, stock up, right? The opportunity is there for you guys. Okay. Alrighty. Let's see. What else, guys? Let me know in the comments. We will have a look at some of the majors. I do see hardest. Yes, thank you very much. We'll have a look at the majors over here very, very, very quickly. So ETH definitely approaching super key support. There will be bounces. I want to be crystal clear. The bounces are tradable. There's big money to be made in the bounces, but we need to utilize much lower time frames to trigger the bounce, right? To trigger that plan for the bounce. You can see over here, of course, if we mark out our fibs on ETH, and we're focusing on ETH because it's one of the most important, it is fighting right now to defend, of course, that 50% level. So we need to look on the lower time frames to get a little bit of an idea or trade plan together. And I don't believe you're going to get your answer today. So make sure you come back tomorrow, because if we do bounce today, it's going to line up later on this week with any of those low high lows, and those bullish divergences and high lows become the trade opportunities. Okay, quickly going into ASTER, there is a chance that ASTER, and we identified already last week the relative strength on ASTER, and it was already dropped in whale room by one of our trading coaches, Chris, over there, all the way at the bottom. You're coming into key support over here, hitting that downsloping trend line, and it has held up relative strength. While a lot of things are trading below their prior lows, you know, this is above. And I think there's a chance that this will create a little bit of a cup and handle formation. So stick with the things that have relative strength. It's basically been, long with stop losses below the previous 2-day low. And as long as it does that, as long as you're maintaining above the previous 2-day low, it's all good. It's continuing towards the upside over here. So here is your low time frame trend. Again, be careful on it, because these things can fall through very quickly. But and it's not, you're not even late, right? You're not even late on this. If it is going to move, you're very, very, very slowly grinding up, putting in those high highs and high lows. Alrighty. Next. Let's have a look at some of the other majors. SUI getting absolutely obliterated. Has this been through enough pain, or is it going to get worse? Well, very, very, very key support coming in over here. This is the next level, right? Yes, you traded into that on a wick basis, but that was a mass liquidation that occurred. So the next level of interest is about 130. Let's just see in terms of percentage drawdown, how much further that would be. 130 is about 24%. So this is why you don't want to jump into things too quick, right? 24, 25% is brutal. And you can see it lines up over here with that first move, drawdown, failed, reclaim, almost back test, rallies towards the upside. So this is going to be absolutely critical support coming into play. Solana. Okay, we said $100 for Solana. It is on this chart. Okay, we'll go into this chart over here. We'll drop onto the daily. There it was. Remember, we spoke about the bounce or struggle to get above 175. You could have shorted over there. And I'll still say the same thing. Any bounce that occurs from here, very, very likely it's going to drop down eventually into the $100 region. Okay, because that is your major support. You broke below mid-range. You broke the upsloping trend line. It's in a downtrend. It is in a downtrend. Is spot safe? Not necessarily. I mean, it depends. If you're in altcoins, those things can go down another 99%. And we've seen it over and over and over again, right? So be very careful. If you're in leverage, definitely not safe. If you're in Bitcoin and you're holding very, very long term, I guess Bitcoin will probably be okay. ETH will probably be okay. Solana will probably be okay. But it's not really a good mindset to be in, to condition yourself to hold things into massive drawdown and lose a lot of money. All right, pump, how low can it go? Let's quickly look at pump.fun. Where's pump? Here we go, pump. So pump already grinding into this key support level. If it fails that, you're going all the way down to 0.0026. Do you guys remember when everyone was pump.fun streaming and they said this thing is going to the moon? And I literally said, I definitely don't think so. I think this is incredibly risky. And it's going to be, typical, call it, I don't want to say a top signal, but, a little bit of froth signal. Same thing, right? It's exactly what happened. 22% down. Alrighty, 22% down. Where can you trade uranium? You'll have to go into a brokerage account. You have to find whatever's the best brokerage account in your region. I mean, if you're worrying that there's going to be some sort of world war, then yeah, maybe you want to go long on uranium. But anyways, guys, link is in the description below. Take advantage while there are still spaces available because this is limited. We are capping. We have a waiting list as well on Whale We're opening it temporarily here for the Black Friday special. This is the early opportunity for you guys to get in because when it's full, and we're going to be closing it for the foreseeable future, right? Closing the doors, right? Not closing Whale Room, but closing the doors. So use the Black Friday special. I'll see you guys all on the next one. I hope you have a great day and cheers for now.